Hey traders, uh, hey traders, welcome to today's live trading session. My name is Chetan and I'll be your host of the day. In today's live trading session, we are diving into NASDAQ and BTC with our expert uh, in the game. That's trading coach James. Hi James, how are you doing today?
Yeah, all good. Nice to see you and all the viewers. Welcome to the show.
Thank you so much. We're excited to have you here. And how are you feeling today's market condition?
It's very difficult. Obviously, we've had a massive sell-off in stocks and Bitcoin and other coins. Not a lot happening on currencies, but the stock market's a big concern. But as we'll see a bit later on, we've only really just pulled back into big support zones. So perhaps we're going to bounce today. Maybe it's not another free fall Friday like last Friday.
Oh, that's great. Well, I just want to tell our viewers that in today's live trading session, we are diving into NASDAQ and BTC with our expert, and who's a reputed and seasoned Forex trader. And he will be showing us how to trade on NASDAQ and BTC today. So make sure to drop your questions in the chat. We'll try to answer as many as possible. Also, don't forget to hit that like button and subscribe so that you never miss out any of these powerful sessions. So over to you, James.
Awesome. Thanks, Chetan. I guess I need to share my screen.
Oh, yes.
So I don't have that ability to do so just yet. Maybe if I just press present. Here we go.
Yes, present.
I think we'll get there right now. Okay.
Yes, we can see your screen.
Everyone see that? Fantastic. All right, so I'm not going to start off with this screen. I want to look at the big. So this is kind of a scalping chart. I've just got NASDAQ and gold on here at the moment. I'll come back to these shortly, but these are the kind of charts that I've got set up. I don't do a lot of day trading. I'm a swing trader, but when I started out trading over 25 years ago, I used to be a day trader. So, and I day traded for about, I don't know, 15 years until I got a little older and maybe wiser, and I now swing trade. So, but the swing trading is useful for me for day trading because I can look at the longer term charts on my swing trading charts and then sort of funnel those into what we're looking at on the short term charts to make better decisions. So I'm going to go to my longer term charts right now and quickly have a look at some of the key factors that we're considering. Now, this is I can't see the screen while I'm doing this, so I'm on my charts. If something goes weird,
yes, we can see your chart.
No let me know. James. Okay. All right. So seeing as the topic of this live stream today is NASDAQ and Bitcoin, let's start with the NASDAQ. And I'm going to go to the weekly chart. I just want to very quickly, and what I'm going to try and do is like talk around the charts here for about half an hour, maybe 20 minutes. And then we'll go into some live trading when the market opens. And that's probably the best time to start live trading when the market opens so that we sort of get the bulk of the move. We can figure out the opening ranges and dive into the market once it settles down and finds a direction. So we're just looking at the long-term charts right now. Please excuse me. I've got a frog in my throat. I've got a bit of flu, but I'm battling through it. I'm manning up, as I've been told to do by my team. So this is the weekly chart on NASDAQ.
In case
So this is a weekly chart on the NASDAQ. You'll notice a couple of things here. We've got a very long-term channel, which is quite evident, this green channel. So that's the broader pattern. We're going up. We're in a long-term channel. We didn't quite get to the top on this last move up, and we didn't quite get to the bottom. We haven't got there yet, but we did on the last occasion. We went right to the top, right to the bottom, and then carried on going up. And you can see generally, although we don't reach the top every time, we get to that sort of 3/4 of the way up, which we did on this occasion. We're now moving back down. We've had two big bearish weekly candles, and we're right into this orange support zone that I've got drawn on here. And you can see it's a previous swing high, order block area, previous swing high over there, swing low over there, swing lows over here. And we're right back into that level, not at the bottom of the channel, not at this 50-week moving average, but we're kind of below the channel center line and into this big order block. If we go to the day chart, I'm not going to spend my time with you now analyzing all sorts of other instruments, unless you specifically ask if you'd like to have a look at something in this next half an hour on a different instrument, maybe crypto, maybe natural gas, maybe something else some of you guys are trading. I'm happy to do that. Unless you ask me, I'm going to just carry on going with Bitcoin and NASDAQ and then go to the trading charts. Is that all right?
That sounds great. Absolutely, James. And just in case somebody has any question, I'll let you know in between.
Okay, fantastic. So look where we are on the day chart on the NASDAQ. Look at all these tendrils, I call them, or spike lows or wicks, all the way down here. And we've just reached down to that lowest wick level and just touching this orange zone. There's the 200-day moving average below in purple. That's a really important level, and probably a level that is likely to be tested. Maybe not today, maybe not in the next week or two or month or two, but at some stage we always return to the 200-period moving average. It's this purple line. As you can see, we went there on that occasion, on that occasion, on this occasion. And generally, actually, this purple 200-period moving average has aligned itself more or less with the bottom of the channel too. You'll also see I've got a blob at the top of the channel, at the top of the short-term channel, the purple one, and a bottom at the green channel, the green one, and this order block, this green order block right here. If you want to put these order blocks, these green blocks that I've got layered on your chart, if you're using TradingView, you can use an indicator. Just quickly, a little bit of a hint for you, and it's called OB-MSB. Just looks like that, and you can put that, if you've got TradingView, choose the top one here by Emery KB, and what that will do is draw these blocks on your chart. They're just support lines and resistance lines. If they're above you, they'll appear in red, below in green, and they're just levels that we may bounce off. You can draw these in yourself. It's very easy, but if you've got fancy software like this, why not let it do it for you? So I've got these blobs in at the bottom there and the blob at that top there, and I've got another one even slightly higher above that at the top channel line there. Those are my potential longer term swing trade targets, the bottom of the channel and the top of the channel. Pretty simple. And then we've also got this one in between, which is a shorter term trend line or triangle, which we've now actually broken down below. So that's the bigger picture. Are we going to bounce here or not? Well, who knows? The market's incredibly bearish. We've entered extreme fear. A lot of people are saying, you know, the top's in for the NASDAQ, the top's in for the S&P, the top's in for the DAX, the German 30, the top's in for Bitcoin and all the other coins and so on. And well, is it? I don't know. I don't think anyone else actually knows either. And so we're going to try and, when we talk about day trading, we want to get an overall idea what our direction could or should be. And when we're right down into support and in an incredibly oversold zone and at very, very critical support, just above the 200-period moving average and into this order block, we should consider that it's probably a better idea to be buying the NASDAQ than to be selling it at this point. That does not mean that we can't carry on moving down to the 200, which would take us down to 20,260, or down to the bottom of the channel, which is where I really want to be buying more than anywhere. I don't really want to be buying here as a swing trader, and I don't really want to be selling much as a swing trader until we get to the top. So we're right in the middle of the swing trading swing, so to speak. That's NASDAQ, but I do think today has a chance of bouncing off this level. If I did a square block in here, I'll just quickly show you if I can get my drawing tool. If I draw that'll do. If I draw a square block around the last, well, really since November, like that, and let's just get rid of these. Let's get rid of the extensions. So there's the block that we've been in since. In fact, we could actually take this even further back to over here. Since October last year, really, more or less. So I know it looks bad. It looks we've collapsed dramatically down. We've broken down through the 100, the 20, the 50, this rising trend line. There's a lot of bearish momentum, but we're still inside this block. And if anything, when we're trading ranges, you'll probably know we want to be buying the bottom of the range, selling the top of the range. And when we're in the ranged market, which we clearly are right now, we do want to be buying the bottom and selling the top. And right now we're at the bottom of the range. And so my idea unless, and we'll have a look at the short-term trading charts shortly, unless anything really changes. That's kind of my idea. So that's it. I've just set the scene for the NASDAQ. That's all I want to say on the long-term charts. If there's anything else you'd like me to look at while we're talking about stocks, German 30, S&P, some of the big tech names. I mean, some of these as well myself personally, but I don't think we'll cover those today unless I'm specifically asked. Now, let's have a look at Bitcoin. Bitcoin's bouncing up a bit today. And once again, I'm going to look at the longer-term weekly chart and just show you how it looks. And once again, we've come down, crashed down this last week, big bearish week, down into the 50% Fibonacci. It's not a Fibonacci level. It's a retracement level. I get corrected all the time. 38.2 is a fib level, 618 is, and so on, 786, but 50% is just halfway. It's not a Fibonacci number. But we did get there, and notice this big rising trend line underneath us, this big red one, the most important trend line of all of them, really, which will keep us in an uptrend if we hold above it, and we are holding above it so far. We've bounced up a little bit. This is a weekly chart, so it's quite a big bounce. We've just come back to 50%, the magical 50% retracement level. Now, once again, we're in extreme fear. There's been more selling than you've ever seen before on Bitcoin. The interesting thing is, though, about 80% of the Bitcoin that's been sold this week was only bought this month. So everything you see here in this big black candle is everyone that bought here a month ago. Well, it's right at the top, actually. Probably people buying at 100, 102, 97, 104, maybe even right at the top when it started breaking higher. It looked like we were going to get a new move up. We made a new high over there, but we failed to hold that after making the new high. It's a double top. So a lot of people will be looking at that and thinking, well, it's a double top. A lot of people, when we broke out through there and got higher than that previous high, went long. All of this stuff here is the people that bought, 80% of it at least, the people that bought Bitcoin right here. So those have all been cleaned out for sure. And what we're left with now is the hodlers, the diamond hands, and the bitter enders. They say that in Afrikaans. There's a particular allocation to that term, bitter enders. If you're South African or Dutch, you'll know what that means. But the bitter enders are hanging on, and that's about it. The retail traders, a lot of them have been cleaned out. What do I think about this? Going back to the day chart. Remember, this is a weekly view. Big bounce off that 50% retracement. Yeah.
James, sorry to interrupt you because we have one question from Sarah here that she want to ask, with US stocks and Bitcoin going down, what do you think we should be doing right now? Or rather, what would you love to know what you are doing? They want to know about this.
Okay. So good longer term question. Thank you very much for that question. I appreciate it. So I'm a swing trader. I'm not a day trader. We'll talk about day trading shortly. But as a swing trader, I need to identify longer term tops and bottoms in the markets from which I can get a reasonably good approximation of the risk and the opportunity involved. Now, I think at these levels with both NASDAQ and Bitcoin, just showed you Bitcoin, and we spoke about NASDAQ a short while back, coming down into the bottom of this range. I think these are, until proven otherwise, I think these are buying areas for both NASDAQ, well, stocks in general, and there are some big tech names that we could look at as well. So it's always a difficult thing for a swing trader because we're trying to pick market reversal points. We're trying to pick tops and bottoms. I know that's not a great idea as a trader in general, but I do it with evidence. So I'm looking for evidence that these markets will turn around. And as a swing trader, I often navigate into positions gradually to begin with. And then once I get more confidence in the position and starts going in my favor, I add more size. Or sometimes if it goes against me, I add more size. Right now on NASDAQ and Bitcoin, I'm actually bullish and not bearish. And it's kind of counter trend, counter the herd, counter sentiment. It goes against everything that people feel emotionally. Everyone's very, very scared of stocks and Bitcoin right now. And often that's the right time to be buying, especially when you see it in the news and the market news goes ballistic on X, on YouTube, in the newspapers. Stock market's crashing, Bitcoin wiped out. We've seen the top, never going to see it again at these levels. And when you start seeing that sort of thing, and it's pretty obvious when it happens. That's when my contrarian view starts to kick in, and I start to think about buying these particular instruments. So yes, I'm bullish on Bitcoin, at least until proven otherwise. The same with NASDAQ.
Wait, one more question I have, James. Like, how do you
Yeah.
adjust your strategies when trading BTC versus NASDAQ? Do you approach them differently?
Yeah, of course. So so the NASDAQ and the stock market in general, stock indices, NASDAQ and S&P, are pretty much near what I think we're sort of reaching up towards a high, at probably a medium to long-term high. Whereas Bitcoin, I don't feel the same way about. And I think Bitcoin probably has one more big leg up in it, and then a retracement. So, but it all comes down to risk. So I will trade them differently. My view on Bitcoin's more bullish than it is on NASDAQ and S&P. I do know that they generally, particularly the S&P and NASDAQ, generally trade in confluence with each other, in tandem, and they coordinated pretty much to a large degree. So if the stock markets don't pick up, I'll start to get more worried about my Bitcoin. But I do think that we've got to be a little bit more nimble with the stock markets, NASDAQ. With Bitcoin, depends on your strategy. Mine at the moment is more of a, I hate to admit it because I've been a Bitcoin bear at times as well, but I'm more of a hodler on Bitcoin right now. And I'll actually be looking to add to my position as we rally up, if we rally up, and to build into what I think could be a 2x move on Bitcoin. Whereas with NASDAQ and S&P, if I get long and we're bullish and it moves up, I'm not that as inclined to hold that for such a long period. I think we'll get a lot more thrashing around in the stock markets and perhaps a more directional move on Bitcoin and maybe XRP and maybe Ethereum and maybe Solana, that sort of thing. Maybe more of a directional move. So I must say yeah, a little bit of a different trading strategy, a little bit more nimble on stocks, a little bit more determined or stubborn, I suppose, on crypto. So we've just ticked up above 82,100 right now as I'm talking, from a low of below 78 and a half. So that's looking pretty good just for a start today. We're going to miss out on some of the short-term day trades on Bitcoin if we spend too long here. But yeah, so a little bit different. And I just one thing generally about 2025, if you take anything away, I think with all instruments, particularly after we've had the Bitcoin, if we get the Bitcoin rally, crypto rally, after that, I think all instruments are going to be stuck in a very messy, very large, very volatile range for most of 2025. I don't expect any dramatic new highs except perhaps for crypto, any dramatic new highs on stock markets or even dramatic new lows. I think we're going to be in a very broad range with big moves, and it's going to be volatile and difficult to trade. And just as a general point about 2025, I think more nimbleness, less risk, less leverage, less hodling, all of that sort of thing will stand you in good stead in 2025. If you determine to hold on to positions forever and you load up the boat and then hold on despite what happens, I think you're going to come unstuck in 2025. There are one or two instruments, however, which may have good runs in them, and I'll probably talk about that in my own live stream later on today or on Sunday. But there are some instruments that I think have got good long-term prospects that one might want to buy and hold. But generally, I think it's going to be like that. I don't know if that was a very long answer to a short question, probably.
Oh, thank you. Thank you so much for sharing that.
All right. So getting back to Bitcoin, as I said, we're just back below 82,000. So that's my general idea. And so I think the same for most of crypto, Ethereum, XRP, those are the ones that I'm interested in. When it comes to gold and metals in general, a couple of thoughts there, but we'll talk about gold. Actually, let me just quickly talk about gold because I wanted to look at the gold short-term charts as well. I'm not going to look at the Bitcoin. I can look at the Bitcoin charts, but I won't be able to trade live on them. So let me just finish off with gold in case we go to the gold chart. And once again, please excuse my hoarse coughing and the terrible noises that are coming out of my throat. So this is gold. Now, we've got a couple of interesting lines on gold. I know a lot of people are interested in trading gold. So Notice this very long-term trend line, this black one that goes all the way from the start to the end. And then there's another shallower one just below it. That one's touching those lows, and the shallower one's touching those lows. And we've got an even shallower one, a longer term one, touching those lows. So we've got a few lines on here, just all trend lines. And we've broken down through the confluence of these two trend lines, the short one, short rising one, sorry, and the longer term one, and the 20 period moving average, this green line, that's the 20 SMA. 20 SMA is your number one go-to moving average on any chart, on any time frame, on any instrument. If you're below the 20 period moving average, particularly as a day trader, I don't pay that much attention as a swing trader to the 20, but I do use it a lot. If you're a day trader, if we're below the 20-day SMA, you should be looking short, and above it, we should be looking long in general. So it's a very good short-term directional indicator. We've broken down through there on gold. I've got two paths on here. I was hoping that we could bounce off here. Don't have a position on gold just yet. I'm waiting to see what happens. Looks like we've broken down and we're now into the red zone, this red path. And I'd expect to bounce up to the underside of this longer-term trend line and the shorter-term trend line. They're still together in confluence right there. And the 20-period moving average is there as well. A bounce back up to there, that would take us to 29.20, and then a move down to the next support, 50-day moving average, previous swing high, trend line. Very, very simple. If I draw a line straight across here from that swing high to there, it's the same level, more or less, and that's where the target would be. What we're looking for is a bounce back up to the underside. We're currently trading at 28.50. Could we get back up to 29.20 before a resumption? Now, there's a lot of talk going on about gold, and is there any gold in Fort Knox? We'll find out soon, I think, or maybe we'll never find out. But so I'm not in any gold positions over the weekend. I would normally be in a position. I've just exited them today, gold and silver. I was actually short on gold, and we're now out of that just because of the nonsense that's going on this weekend. Are there any more questions there?
Yes, James, I was about to interrupt you.
Okay.
So we have one question from Devrim, that you have shared the MSB OB indicator. Is there a similar indicator, MSB, for selling blocks?
Yeah, it's the same indicator.
Same indicator.
Yeah, let me try and show you. Yeah, here's one on the pound, for example. Pound US dollar. These blocks are drawn in here automatically by that indicator. So that's a big order block. This is a day. Sorry, it's not the pound. It's a Swiss franc dollar yen. Swiss franc yen. Swissy yen. There's the order block above us. That's drawn in automatically by that indicator, OB MSB. So you get the green blocks at the bottom. There's a green one, and the red blocks at the top. And then you also get these little lines in between. You can see. I don't know if it's difficult to see. Let me try and zoom in. There, you see that little red line that says MSB. That means market structure break. So when we broke down through there, we broke market structure. In other words, from an uptrend into a downtrend, and then we formed the order block on top of it. Also notice that in this instance, there are all, there's the 50-period moving averages up there into that order block as well. So yes, this indicator does draw the lines on the top and on the bottom, depending on where the market is, and they will form automatically as if you just leave it, they'll appear and disappear automatically as time goes on.
Thank you so much, James. And also we have a few questions that if you can talk about nat gas and its Joe 40.
Nat gas. Yeah. All right. Let's have a quick look at nat gas, everyone's favorite. I don't know why everyone's obsessed with nat gas. I've been trading it a long time, and I did one of my initial videos a couple of years ago on natural gas, and it just got so many views, and everyone loves to trade it, despite it being the most difficult instrument of all of them to trade and the most frustrating. Most people who trade natural gas lose money. Most people have no idea what they're doing, but yet everyone wants to trade it. So it's an interesting one. And I think it's got to do with the fact that it's very volatile. We can move 5, 10, 15% in one day on natural gas because we're trading between $2 and $4 most of the time. So a move from $2 to $2.50 is a massive move, and that can happen in a day. The other reason I think people like trading natural gas is because, like any other energy, there's some sort of romance or vibrancy or excitement about trading something that comes out of the ground, out of the sea. There are machines, men with muscles rippling, sweating and bleeding, digging it out and drilling it out. And there's this sort of romantic picture to all energy trading. And natural gas is one of them. People love to trade oil, uranium, you name it, any energy, people love it. So natural gas is one of those. And I try to help people actually navigate this because it's really difficult. Let me tell you what positions I'm in very quickly. I've got a long position. I had a short position there where the red arrow is, and it started moving down. Great. Only down towards that swing low there. And then it bounced up and broke up through my exit area, just above that black line. And I immediately hedged that trade. So I have a short position at the red arrow at roughly, I don't know, 3.94, and a long position at 4.04. So yeah, that's it really. And I'm now waiting to find direction on this chart. This is the 4-hour chart on natural gas at Black Bull, my broker. You can look at the Henry Hub chart. You can trade this on continuous. I'm doing a whole course on this, in fact, this next month. This chart in the middle is the continuous price at Pepperstone. This one here is the Henry Hub futures price, the current front month. And look how we've just bounced off that support level again and just wheedled our way back into our original short position. At some point, when this starts getting some direction, and it looks like we've got a nice a range zone to trade with, to work within, basically, the moment we break out of this range, either the top or the bottom, I'll remove one of those positions. If we break out through the top, I will remove the short position, take a loss on that, and shore up, add to my long position. If we break out through the bottom, I'll close my long position for a loss and add to my short position, which is situated over there. At that point, the short position will be in profit, and I'll add some more. And the profit from the short position that's already open will cover some of the loss on the long position and also help us. Well, it's not going to help us, but it will help us profit more. It's not going to help the move. No one cares what positions I've got on, but I do have futures contracts on this trade. So moving down below here will put me short, moving up above there, put me long. And that's based on a 4-hour candle closure. So it's not on a 5-minute chart or a 1-minute chart or a 3-minute chart, even 15 or 1-hour chart. This is on a 4-hour candle closure. And if we have a very big move and it kind of leaves us behind, in other words, let's say this plunges down, I'll still be waiting and not getting into the trade, waiting for the retracement. I'll draw this quickly for you, back to the underside of that line, and then okay, I'll use this. So let's say we get something like that that just dramatically crashes down in the next half an hour. I'll be waiting for the bounce back up to the underside, the breakout level, and that's where I'll take my additional short position, looking for the move down. So that's my strategy on natural gas. And obviously the same thing, if we break out through the top, then I'll just use the same tool. We'll be looking for a, this is going to squiggle up like this, something like that. Maybe it'll just bounce off there again, eventually break up like that. We'll think we've been left behind, but it'll probably retrace back to retest the top and then continue like that. I don't have any directional bias on natural gas at the moment. We're really expensive. So if anything, it's short. We're trading at levels which are historically pretty high. So I imagine, like our original position, the short position, the red arrow, I imagine that will resume. And it looks like we're trying at the moment to head down there. So that's my strategy on natural gas. Any other questions?
Well, thank you so much. No, right now I don't see any other questions.
Okay, awesome. All right. So if there are no other questions, then let's go to the day trading charts and let's see what we've got going on. Now, these are 15-minute charts. This should be 15 minutes. So we've had a look at the longer term charts. I'm not going to bore you with going over that over and over and over again, because basically I've said we're very bearish on NASDAQ. We're very, very bearish on Bitcoin. I'm actually going to put Bitcoin up here, but I won't be able to trade this live on these charts because Pepperstone does not allow Bitcoin. Let's just go with a Coinbase chart. Okay. So these are 15-minute charts. So I've got NASDAQ and Bitcoin. Let's stick with what we said we would talk about on the box on the live stream. So we've looked at the long-term charts on both of these. We've said they're both very oversold. We've reached very key support levels on both of them. We're at the bottom of the range on the NASDAQ. We're into the 50% Fibonacci, incredibly oversold. Fear and greed indices are off the scale on both of these into extreme fear. And so, and I said to you, I'm looking to go long. Doesn't mean I'm stuck to that view. You know, there might be a short opportunity or a long opportunity. I don't know. But the first thing I do is have a look at the hour chart. So we've gone from the day chart to the 4 hour. Let's look at the hour chart. You can see basically NASDAQ's been in a range since I suppose about 20 hours ago. We've been in this very, very tight consolidation range on the NASDAQ. It looks like a bear flag, but it doesn't mean it's going to turn out. We could equally as well break out through the top or through the bottom, but we've got a nice range. I'm going to get rid of this black line in the middle and just leave those two lines on the hour chart. That's so basically, when you have a very tight and neat range like this on any instrument, it's a good idea to trade an opening range breakout. Now the market has just opened. Okay, so we're looking at NASDAQ, market's just opened. Let's go to a shorter term chart. We go down to the 15, you can see the same range there. Let's just focus on the NASDAQ for the moment and leave Bitcoin for the time being. I want to show you what I've got on this chart. This is the 15-minute chart, but I'm going to be trading off the 5-minute charts. Some people prefer to trade off 3-minute charts when it comes to stocks, day trading stocks, scalping stocks. Doesn't really make any difference to me. 5 or 3-minute charts is fine. Now, there's our opening range, and there's an order block created by MSBOB, so that's a good zone to look at to break through the top if we do. There's the range bottom, and it looks like we're heading down to that range. Now, the moment we broke down through there, now there's only 1 minute into this 5-minute candle, so we've still got another 4 minutes to go. I'm not going to immediately take a short here because we have broken down through the bottom of this range here, but I need to wait for the 5-minute candle to close. So we don't take any trades until the 5-minute candle closes. And now you can see we're just bouncing back in again. Let me explain to you what I've got on my chart. Number one, I've got some moving averages and I've got a volume weighted average price, VWAP, VWAP. The orange line here is the VWAP, VWAP. And you can also get this on TradingView and just type in VWAP. I'm not going to explain what VWAP means. It's a weighted moving average, and I'm using the 20-period VWAP. Some people like to use 24 or 23 or whatever it might be for whatever reason. I don't really know. But I think I've got 20. Let's just check. Yeah, 20-period VWAP, VWAP. So that's that orange line there. And it basically just acts as a support and resistance line. Now we're moving down. We've still got 3 minutes to go on this candle. So we're not going to do anything. I know it looks exciting. I know there's FOMO coming into a lot of your minds that we should be shorting right now, but it's not at the right time. The candle hasn't closed. This could equally as well just bounce up, make a massive wick low, and then move up higher. Also, remember, we're in the opening 5 minutes of the market today, and we don't want to be trading in the opening 5 or 10 minutes because the market often thrashes around, tries to settle down, tries to find its feet, doesn't really know what's going on. And there's all sorts of jostling for position, lots of big orders flying through, people trying to gain ascendancy, trying to force direction. And it looks like right now the directional force or attempt is to drive this lower. So we've still got 2 minutes to go. We will then, if this closes beneath the support line, wait for a bounce and a retrace back to the underside, and then sell it for a continuation of the move down. Let me illustrate what else is on these charts for you. I've got 2 other moving averages that indicated by this red line and the blue line. The red line is the 50-period moving average, just a standard support or resistance moving average that I have on all my charts, every instrument, every time frame. And this one here is a 20-period moving average, simple 20-period moving average. It's not the same as VWAP because it's not weighted according to volume in any way at all. It's just a simple moving average. You'll also notice I don't have any volume charts on here. I've got no volume bars at the bottom. I don't trade that using volume, but you could do that. If you want to put some volume on the volume indicator on the bottom, you can just go to indicators, type in volume and just choose, I think, the top one, just volume. Let's just put it in just to show you what it looks like. And there's the volume candles. You can see right now we've got fairly high volume with this big move down. And basically, when there's more volume on a good move, you expect that move to be more likely to continue. as this one is as it goes. I'm going to remove that because it's in the way. Now the candle has rolled over. We're now into the next candle. Well, what we want to do is to be selling a rally into somewhere around about 24.55, this black line, and maybe even slightly higher. A lot of traders will like to sell at VWAP. So VWAP is this orange line, which you pointed out earlier. A lot of traders like to use VWAP as the dividing line between the buying and the selling. Notice how this candle's bouncing up so dramatically. We've broken down through that support. It's now almost negated that breakdown to the extent that we don't really want to be looking short, but we need to wait for this candle to close. The other thing I've got on this chart, and I'll quickly show you this, is the stochastic. And this is the 14 period 7-3 stochastic, 1473, slightly different to the normal inputs that we have on the stochastic. I'm reading that off there. Normally this would be set at 1413, and you get a very squiggly line. 1413. Okay, I don't know why it hasn't changed. Oh, there we go. So that's the 1413 stochastic. It's a bit of a mess, not easy to see. And so I just use 1473 to smooth it out a bit. And that gives you a much smoother and neater curve like that one there. And really it's just a guideline once again. We want to be selling when we're overbought on the stochastic. We want to be buying when we're oversold on the stochastic. So that's above 80 is overbought, below 20 is oversold. We haven't reached anywhere overbought or oversold since the market opened or in the last number of hours. We've been stuck in the middle. Ideally, we want to see this move into an overbought or oversold zone. It's not critical though. It's not a game changer, but it's useful to know that if you are selling, for example, like here, if we were selling there, it's useful to know and comforting that the stochastic is overbought at the same time, and it gives you more confidence that this might move down. Now, we've got a complete reversal here. This is a bullish engulfing candle so far, and we have 3 minutes to go before this candle closes. But if it closes up here, it's now negated the downside move, and we need to be looking to the long side. We want to see a close at least above VWAP, this orange line. We want to see a close above that order block, of course. That's the most critical level. And this black swing high, really. It's a double top. There's a swing high there. We came back down. And again there, it's a double top. We've now moved down. Fake break so far below the bottom, which means that if we get a fake break, if there's a saying, I can never remember what it is, if the short ain't right, the long is right. Something like that. There's a little ditty that goes, if the short ain't right, the long is, I don't know, if the short's wrong, the long is good, or something like that. But certainly the short looks wrong at the moment. We tried to break down, probably got a lot of people into that trade, possibly stopped a lot of people who were already long out, and now the market is cleared for a move up. There's VWAP, there's the moving averages, first hurdle, then the order block, then this top swing high with a double top. So we can watch that very closely and wait for that to do its thing. But right now there's no trade on, so we can go back to Bitcoin, have a quick look at what's going on here. This is the hour chart. So we want to go to the short-term chart. Let's start with the 15.
How about
by
James,
the way, yeah, let's do it.
Yeah, we have a few questions here now. Like one is, why do you hedge it instead of just closing position and open later on?
Right. So when it comes to prop trading, hedging might not be pertinent or allowed. I'm not 100% sure. I'll get to know more about this as time goes on. But is it allowed, actually, while we're here? Chetan, is hedging allowed on Ola?
No, right now hedging is not allowed.
Okay, all right. I'll talk about it very quickly in a minute, for a moment anyway. I basically hedge because, number one, it gives you a massive psychological advantage. You don't have to get out of your original trade, so you don't have to take the loss, at least not immediately. And when you take the hedge, you get into a position in the opposite direction. I simply just, if I'm short on the NASDAQ on my account, I'll buy an equal position on the NASDAQ to the long side. In other words, I'll have one short position and a long position of equal size. They'll be at different prices. So if I went short and it suddenly bounced like we've just seen here on the NASDAQ, and I hedged, and now I'm now in a long position higher up than my short position, I can now just wait and see what happens. My losses are locked in. I don't have to do anything. I don't have to make a new immediate decision. I can wait as long as I want until the market just goes to sleep or does something interesting. I don't have to take any action, and I can unhedge that trade when I have much more confidence in the position. So first of all, I've avoided the psychological damage that comes about, and no one's immune to it. I've been trading for over 25 years, and I still hate to take a loss. But so when I hedge, I can lock in that loss, and then I can unhedge my position. So in other words, I've avoided psychological damage, but I can also then unhedge later on at a time that's convenient to me, rather than having to make another very fast and potentially stressful decision. I can just sit back and go and drink a Coke, have a Red Bull, get my my zing back, and think about it for a bit, and then get back into the market or unhedge when I want to. Also, when you unhedge your short position, in this case, let's say my short position is now hedged with a long position, and it starts going up and up and up, and I'm still hedged. When I have to take my short position off, my long position will be in significant profit, particularly if it moves up very rapidly and very fast. And I wait a bit before I unhedge. Excuse me for a second. I've got a bit of flu, as I said. So, so when I take that short position hedge off, in other words, take the loss on the short position, I'm already in significant profit on my long position. And once again, that helps me psychologically because I can see the green and the red in my account. I get rid of the red, and that kind of is offset. The pain of that is offset by the green in my account. It all sounds very juvenile and very immature, and someone of my experience should not be worried about taking losses and getting hit on stop losses and that sort of thing. But trust me, it happens to everyone, no matter what level of trading you're at. And if you can avoid those psychological hiccups and things that could cause you stress, that's a very good idea. The biggest enemy of all traders is not whether you can read the charts or not, or whether your technical analysis is up to scratch or how much experience you've got. It's always, almost without fail, the fact that traders get emotionally involved, they take too much size, too much risk, and end up in a position where they can't sleep at night. They start to make poor decisions. They've bitten too much off. They eventually, the further the trade goes against you, the more and more difficult it is to get out. You start adding to losing positions, and eventually your account's blown. Now with hedging, you don't have to do any of that. You avoid all of that mishmash. You can just put your hedge in and leave it alone. You can even come back the next day or next week or next month. If you don't have the stomach to carry on trading, just leave your hedge in, your loss is locked in, and you can deal with that at a point of your choosing later on. Okay.
Great, thank you so much. We have a few questions from Devrim, and he is sorry for asking a lot of questions, but no worries, Devrim. We are here for answering your questions.
No problem.
So he has one question. Is there a specific reason you use SMA, not EMA?
Yeah. So it's probably just because I'm very old. So to be honest, when I started trading, EMAs were only just introduced. That sounds weird. It wasn't even a thing when I started trading. Just watching this NASDAQ chart as we're approaching the top of the range now, we will go long if this breaks higher. Remember, we're looking, let me just quickly go, I'll talk about SMAs in a minute. Wrong chart. We will go long if this breaks above this zone here and then back test it from the top. Let me show you what that might look like if we get that with my handy arrow path tool. So if we get something like this, a break up through there, I'll be looking for the back test into that order block down here. Let's say something like that, and then a continuation. All right. So I've got my plan in place. It hasn't been executed yet because there's nothing to do. We almost had a plan down here. Remember I said, wait for the next candle, wait for the retracement. Don't leap into the trade. If any of you got into this trade, you'll be regretting it now because you'll either be stopped out or hedged or something like that. So wait for the next candle, always do that. And that's what we'll be doing over here. We break out, wait for the next candle, hopefully a pullback, and then a continuation, just to update you on that. So the reason I use SMAs is because they are the OG of moving averages. Number one, I believe in, I'm a bit of a traditionalist and a bit of a stick in the mud, I suppose. SMAs have been around since the dawn of trading, and the market still respects and responds to them very specifically. A lot of hedge funds are managed by people of about my age, and they're not too interested in VWAP and EMA and DMA and all the other ones. As a mathematician, and that's my background, I understand all of these, all the mathematics behind all of them very well, but all that really matters is that the market, is that we trade what the market reacts to most of the time. Now, the market does react to exponential moving averages and volume weighted moving averages, all that sort of thing. But and particularly on the longer term charts, we're talking about 1 hour, 4 hour, day charts, weekly charts, the simple moving averages are the most important, in my opinion. It's not really that important, actually, whether you use the SMA, EMA, or DMA, or VWAP. It doesn't really matter. Ultimately, they'll all end up more or less at the same price on the longer term and the important charts. So when you're looking at a chart, let's say a day chart or a week chart or something like that, or even a 4 hour chart, often the EMA and the SMA will be pretty much on top of each other. There might be a small difference, but if you're going to pick one out of the other one, if you're going to choose SMA or EMA, I would always choose SMA. And I don't want to have them all on my charts at the same time, so I've picked SMA rather than EMA.
Great. And is Scholastic same as RSI?
Yeah, it's a little bit, it's an oscillator. So, a couple of things about oscillators. They're measuring past price movements. They don't predict anything. They show you what the past price movements have done. And the RSI is, you can put an RSI, you'll see that they're pretty much the same. 14-period RSI and the 1473 stochastic will give you more or less the same sort of information when you're looking at overbought and oversold. I'll put the RSI up right here. And you can see so we're looking at the top line on the RSI. That's the 70 level, and the bottom line is the 30 level. Now notice when we reach near the top, we're at the top on the stochastic, we're at the top on the RSI. The top here on the stochastic, near the top on the RSI, and so on and so forth. Near the bottom on the stochastic here, bottom on the RSI. Bottom on the stochastic, bottom on the RSI. Some people prefer RSI, some people prefer the stochastic. I prefer the stochastic for a couple of mathematical reasons, but nothing more than that. So you could use either, really. Doesn't really matter. Right now, at the moment, the stochastic and the RSI are just diddling in the middle, stuck in the middle of the range. They're not giving us any info right now, and they probably won't. The problem is when you get this very messy, choppy market like we've got right now, what you've just seen, is that the RSI and the stochastic become kind of irrelevant because they get messed up. When you've got a smooth trend, it's much, much better. Smoother movements like this. You can see we get much better movements on the stochastic or the RSI. But when you get this messy stuff, it just sort of dribbles around in the middle.
Great, thank you. And one more question is from Devrim, that the black lines for support and resistance, do you draw manually or do you also use an indicator for automatically drawing those ones?
Yeah, no, these I just draw manually. I mean, it really is. Look, trading is not. It's not. You don't need to be a nuclear physicist or a mathematician or even have high school maths. The lady who was running FTX didn't even have university mathematics, I believe. In fact, I don't even think she had high school mathematics. Well, I mean, you know what happened to FTX, but that's probably not a good example. But these lines, you just eyeball, you just draw them on your chart. Now, so I look at this chart. Yeah, there's a top there. I go across to the line drawing tool. If I can find it now, it's over here. And I just eyeball it and just see whether it's sort of equal to any previous highs. And I just notice, yeah, it's a high there and it's a high there. And it's a double top. So it's a perfect resistance line. Same on the bottom. We've only got one touch there now. And now I can put another line right at the bottom there where we just moved down to in this last little dip. So I'm just going to clone that one and draw a third line on this chart just for reference for later on, in case we ever get back down there. And then, you can go to a 15-minute chart, see if there are any more obvious levels. There's obviously one over here, this big spike down, and this previous swing high, low over here. And so I just clone them. You can use the clone tool and just draw it something like that. Probably a better line is over there. I've cut off that wick, but I want to include the bodies of those candles and the bottom of this last swing low. So now that's all you've got to do. And I've got my 4 lines on the chart, on this 15-minute chart. You could go to the hour chart, see if there's anything there. Of course, there are some other lines that you can draw in here. There's a line at this top here, something like that. Another double top. This is on the hour chart. Notice how that's a swing low, swing high, swing high, swing high. And it's also at the top of this order block. So that's another line. We're probably not going to get there today. It's 21.35, and we're trading at 20.5 now. So we're not going to get there today. But if we do get up there, and what's nice is you can leave these horizontal lines in your chart and actually the trend lines for as long as you want. Quite often, the price will revisit them at some point in the future. Yeah, so it's just eyeballing it, really.
All right, thank you. Thank you so much.
Any more? More questions?
No.
Are we done?
No, that's it.
Okay.
Thank you.
All right, let's get back to our day charts or day trading charts. So essentially on NASDAQ, we've gone nowhere since the open, back to where we were, made a false spike down below that low there, created a new low that we've drawn a line at. We've got the order block and the moving averages above us. Let's quickly zoom in. We'll come back to Bitcoin shortly. So you can see that looks like a beautiful spike down, very bullish, nice V-shaped recovery. If you went to a 1-minute chart, it would look even nicer. What have I done? That's 1 hour. What have I done? Let's have a look at a 1-minute chart. Yeah, so there's the 1-minute chart, big V-shaped recovery. That's what we want to see when we're looking at a bullish move. So that looks fantastic. And now all we're waiting for is for this to confirm with a break through the top here. And what we want, as I said, is a break up, a pullback to the support level, which is previous resistance, and then a continuation of that move. The natural area for this move to go up to is my next black line, or this one up above here that I said we would never get to today. You never know. It's 1,000 points above us. But let's start with this one, and that's at 2091, sorry, 20,912. Yeah, so that's a good target. Break up through there at 2,600 up to 2,900. That's 300 points, and that would do us very well for a day trade. So we'll just be watching that. Nothing to do at the moment, nothing to do. And, you know, when the problem with day trading live like this is it can get very boring. Sometimes nothing happens for ages and ages and ages. And we may only get the moves much later in the day. Well, let's see what we can find. This is Bitcoin. Let's have a look at this. So we've got a U-shaped recovery going on Bitcoin rather than the V-shaped recovery we just saw on the NASDAQ. It's a very nice smiley face rounded bottom. The software has already drawn in for us the support blocks below us. These are the order blocks. So one there, and then above us we've got a couple as well, and a couple of market structure breaks. There's a thin red line here, MSB, and there's a green line here, also MSB. We've broken up through that one, and we're on the way up, but we've got these ones above us. Now, do we have any opening ranges? Remember, there's not a stock, so it's not going to trade with the opening ranges of the stock markets and so on. It does its own thing 24/7. But what we can do is draw a couple of lines in here, and we can draw not that one. We can draw a trend line in. And it's really just a matter of using your own artistic and creative means to draw these lines. There's a perfect trend line on Bitcoin. So we know that we've got one point of reference. If we break down through there, we're talking about day trading. I'm bullish on Bitcoin, but we're talking about day trading. So if we break down through here, we might get a chance for a short. On the upside, where do we have to get above in order to get some go up? Well, we don't have any obvious tops here. We've got this smiley rounded face bottom, not much above us. So in this immediate vicinity, we may have to wait for there. But let's see if we can get a bit of a pullback on Bitcoin, maybe down into one of these order blocks, and then have the opportunity to draw a line at the top here where we've just turned around, and that will give us our potential area for a breakout trade. Now, when day trading, there are various ways you can do it. I like to trade one of two things on day trading. I like to trade bounces off. In other words, if we've moved down to a level, we have an oversold stochastic or RSI, we've reached an order block or a trend line or a moving average or a horizontal line. We see some changes in the candle shapes. We see the candle starting to slow down, not so bearish, maybe a few wicks, maybe some engulfing candles at the bottom, bullish engulfing candles, maybe a one up, one down candle pattern, or maybe a full stop or a gap, any one of those candle patterns that we often trade with. And we're looking for all of that to take place at a particular level on the chart where we can say, yeah, that's a good place. We're bullish. We want to be buying. We've got all that stuff in place. We've got an oversold stochastic. We're at, let's say, the 50-period moving average and an order block and a horizontal line, or whatever it might be. And then that's when we place our order. But we wait for the conditions to show us that the market actually is reversing. And we don't just, with day trading, we don't just enter a trade willy-nilly when we get to a particular level. All right. So now on Bitcoin, we're kind of getting squeezed. So we're sort of developing a bit of a picture. That black line that I drew there, very interesting. You can see it's a previous swing high where the price tried to get through VWAP there and failed. It's also this previous swing low. This is a 15-minute, this is a 5-minute chart. If we go to the 15-minute chart, see if we can get some more clarity. Notice that's also a swing low going all the way back to the 26th, 2 days ago. It's a swing low there as well. And if we squeeze this even further back, that's as far back as we can go because Bitcoin's come all the way down from much, much higher. So that's a super important level, and we've just rejected from there now. If we break up on that through that level on the 5-minute chart and we hold above there, we back test it from the top and then resume with a reversal candle, I'll be looking to buy Bitcoin in that instance. That will look something like this. Maybe this path will do something. We could fiddle around in here for quite some time still as we go towards the corner of this triangle. And then our target will be, where's that black line? Where's it gone? Oh, this is Bitcoin. Yeah. So our target will be, where did I say that was? Can't remember now. Anyway, let's say that's the top of this order block here. Oh, we didn't have a target. You're right. We were actually looking at this black line. This is our breakout line. So our target would be maybe this order block here, then this previous swing high, or even up there, depending on your views on Bitcoin. Let's leave it up there for the moment, right at the top. I think we could get there today, actually. I think that's being very optimistic, but I think we could get to 86. It would be fantastic if we did. So that's my plan on Bitcoin. Or if we break down through this bottom trend line and these moving averages, we have to be a little bit careful because we've got order blocks just below us, and it may not get that far before reversing, very much like the NASDAQ did earlier today. So there we go, folks. We've got 2 setups and no trades. We've either got a break up or down on the NASDAQ and a break up or down on Bitcoin. And I'll be looking to trade these at the first instance I get, and ideally with an overbought or oversold stochastic at the same time. I'm not sure if we'll get that in conjunction with that.
Thank
and
you.
for now it's just a matter of waiting.
Yes, absolutely. We have one more question we missed out from Devrin, that Ethereum is trading at the same price it was during April 2021. If you bought Ethereum in April 2021, you would be break even right now while Ethereum is plus 0%, Bitcoin is plus 42%, and the QQQ is plus 49%.
Yeah. So what is the question?
So basically, he has a question regarding Ethereum. So if you can just talk something about like Ethereum, where like it's in the price where it was in April 2021.
Yeah. So this is the weekly chart in Ethereum, and you're quite right. We had some big go up earlier on in the game in 2017, and then 2020 up into 21. And since then, after pulling back into this current consolidation range, nothing has happened at all. But what we do have is a trend line that we've now broken down beneath. That's this trend line, which is a pretty important line, really. You can see it's been touched there prior. This is a weekly chart. This is going back to 2017. Over there, over here, over here, 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 and so on. And we've now broken down through that line after having broken up down through it a couple of weeks ago and actually closed that week above there. Now, this is really important. This week has not yet closed. This is a weekly candle that's still open. If this candle does the same as it did 3 weeks ago, big spike down and close above that trend line, it will be incredibly bullish for Ethereum. I'm not saying it's going to do that, but that's the kind of thing I'm kind of looking for today. And today's the last trading day of this month. So today could be a really exciting day. If this fails to hold this line and doesn't close above that trend line, then we're basically stuck back in this longer term range, and we could draw a big block around all of this as well and just say, yeah, maybe this is just a big, very, very, very long bull flag. It's not very flaggish, but it's pretty similar in the fact that we've got, move up, move down, consolidation, admittedly rising. But if I draw a channel line, clone this line and draw at the top, it's probably followed it perfectly. Yes, it has. So we're in this rising channel that we've now broken down below today, but we have not closed this week, this month, or today, and we'll have to decide what's going to happen next. Notice we've got a big weekly order block below us and another one below that. So yes, Ethereum has gone nowhere since 2021. And I'm not sure if your question is, should we ditch Ethereum altogether, or should we give it up as a lost cause? Is it going to be stuck here forever? Well, it won't be stuck here forever, but it may have to dip down. Or if this week closes incredibly bullish and we get a big spike and this starts rushing up as today goes on and closes back above that line, I'll be certainly interested in adding more Ethereum to my already long position. So yeah, frustrating, but pretty much maybe it's Ethereum's turn. A lot of people think it's Ethereum's turn. I'm not really a crypto maximalist, I'm afraid. If you want to know more about crypto trading and people are really into it, full on into it, I'm not the right guy. I trade a lot of crypto. I trade it like any other instrument. I don't apply the hype, the FOMO, the diamond hands, the hodling, the meme coins, all that stuff that goes on, and the scams, and it's just endless, really. I don't get involved in any of that at all. I see Bitcoin as a highly volatile and yet has a highly volatile instrument, which has some potential for future growth into much, much higher levels. But it's a very difficult instrument to hold because of the huge volatility. We're already down about 40-something% from this year's highs off on this last swing. So, it's very, very difficult to hold Bitcoin. And I have quite a lot of Bitcoin on hand at the moment, but not enough to be wiped out by this move down for sure. So it's not something where I'm all in. I'm not just not one of those people. But I do like to trade Bitcoin, and it gave me a huge amount of profit last year. I got in immediately on the Trump trade, the moment that I was betting on Trump winning the elections anyway, for other reasons. But the moment the election was sealed and done, I got in on most of the Trump trades, and they lasted until the end of the year. Bitcoin doubled in price, and I was in right from the bottom. So what I'm using now is my Bitcoin profits that I made on the previous run up. Trying to protect some of it, but using that money, not risking my original capital. So I'm quite happy with the way things are going at the moment. But Ethereum, I don't know. I mean, I think if Bitcoin goes up, which I think it will, Ethereum and XRP, I'm more excited about XRP actually than Ethereum. I think Bitcoin and XRP are the two interesting ones at the moment.
All right. Thank you so much for answering that, James.
No more questions?
No.
Okay.
Questions.
All righty. So yeah, we had such a lot of drama last Friday with markets moving all over the show, and today markets just gone to sleep. I think after the thing is, after this big move, this is where we are on NASDAQ. We've had so many down days. It's not likely to carry on crashing down today at all. We're at the 200-period moving average almost. We're at this big, solid, strong order block. We're at the bottom of this block range. Everyone's feeling a little, I speak to quite a lot of fund managers. It's the world I come from, fund management and hedge funds. And a lot of them are feeling very bruised and battered and not likely to make any big decisions today. So some of them are hedged, some of them are just standing aside, some of them got stopped out, went to cash, some of them shorted, but are not too sure about it. So it's one of those positions in the market where everyone's a bit worried, everyone's a bit concerned. No one really knows whether this is going to bounce or whether this is going to plunge lower. And that shocks everyone into inactivity. We'll probably see a number of days bouncing around this level, maybe a probe lower to the 200, maybe even to the bottom of the channel down here at about 9, maybe below 20,000. But I think if we do get down into that level there, massive order block, market structure break, trend line, if we did get down there, would be a buy for me for sure. Those who are saying we're in a long-term bear market, which has just started, we got a double top on the NASDAQ, that top went slightly above that one, could well be right. I'm not disparaging that viewpoint at all. In fact, we've been short for this entire period. We've been selling the rallies and getting out on dips, selling rallies, getting out on dips. Until this last week, I'm now slightly long, but only a very, very small position. And I'm looking to add to that long position, maybe down here, or maybe on a rally back up. I'm not 100% sure. I'll be watching the price action very carefully. We haven't covered currencies today whilst we're waiting for those markets to get moving. Pretty much in the doldrums, look at the dollar index. Quite a mess, really. But quite a reasonable structure here, although we've now broken back up again. We've got this sort of head and shoulders pattern. We broke down through key support there, tried to get down, didn't even get down to the 200 period moving average. We've been held up by the 100 and bouncing up again. That's the dollar index. If this moves up, euro should move down, pound should move down, dollar yen should move up. Dollar yen, we have a long position on. We also have a long position on the euro, and we're hedged on the pound. But dollar yen, we have a long position on. That's the way it looks at the moment, just curling up off that bottom and the 50% retracement level and this previous swing low. So we've got a small long position on there, waiting to see what happens. But we've also got, in the opposite direction to the dollar, a long position on the euro. So one of these will work out. I don't know which one. So you could say we're kind of hedged at the moment. I think we've covered almost everything. We've covered crypto, stocks, natural gas we talked about. That still has not moved for those nat gas traders around. Not a jot. So for how many? 1, 2, 3, 4, 5, 6 4-hour candles. That's a whole day. We've been stuck between 393 and 389, a 4-cent range for 24 hours. So that'll break somewhere, one way or the other today, probably, or maybe only on the weekend with a big weekend gap. We'll have to figure that one out as we go towards the weekend. And then we've also got VIX. We took our profits on long VIX. We were long from the bottom. We got out yesterday, actually. So we're out of the VIX, and we're long on TLT and a couple of other things there, nothing on the Rand. And then for those of you who are following me on the softs and the grains, you'll know what we're doing on there. I'm not going to talk about that here. Right, back to our charts. So NASDAQ starting to edge up. I can trade off these charts, folks. So if we do get into a trade, I'll immediately enter the trade using the buttons here. But I can't do it on Bitcoin because I can't currently trade Bitcoin at Pepperstone for some odd reason. Right, there goes Bitcoin breaking up through the top there. Perfect. So what I'm going to have to do is indicate here with a green arrow our long positions. Notice we've got some resistance to the left here as well. We've got 2 little spikes up there, 2 little spike highs just over here into that zone there. So that's where we're currently trading, this thin dotted line. We're currently right there at the moment. Now, if I do take a trade here, folks, I don't want you to mimic it or do what I'm doing. I'm a little rusty with my day trading. Doesn't mean I'm not very good at it, because I'm pretty good at it. But I don't want you to be following me and saying, well, James said this is a good trade. I don't know. I don't know. Maybe I'm that rusty that I've forgotten how to do it. I don't think so, but let's see. All right, so we are a little bit overbought on the stochastic as we break up on Bitcoin. And we have to be careful of that we're not sort of going into an overbought area. But we have now broken that line, and we can now move this. Let's go back into here. Nothing happening on NASDAQ just yet. So what we can do here is just take this line and do this. Okay. And what we want to do Let's neaten this up a bit. Yeah. So what I'd like to do now is to try and buy a dip back down to 82,500. We're at 82,800 right now. Let's see if we can get a little dip. In fact, what you could do, what I would normally do right now myself personally, is in swing trading, not necessarily day trading, is I'd put a small position on right now, but a small position, and then add to that and put my full position, complete the position if and when we get the retracement. So I'm going to indicate that quickly now, the little green arrow or triangle arrow, and just indicate that I would probably, at the close of that 5-minute candle, which has just closed, probably just buy a small tranche right there on Bitcoin, looking to add some on the dip back down to 82,500. So, and normally that would be like a third of my position right here, or maybe a half of my position when day trading. And I'd like to put the other half or an additional third back onto the trade on a dip down there. So let's say that would be roughly a third. I can't take this trade, as I said, because this broker does not offer Bitcoin. I trade my Bitcoin at a different place. Now, here goes NASDAQ. Same sort of thing on NASDAQ. I'm going to draw that little illustration in like I did on Bitcoin. So we're looking for something like this. And then a move up there. As I said earlier, that's a good place for us to aim for, I think. Looks pretty good. Yeah, I like that. I think you can all agree with me that if we do get that move, it will be picture perfect, technically sound, and quite lovely.
Well, absolutely.
Let's see if we can get that. You agree?
Yes.
All right. So let's wait on that one. Just going to get my screen going over to my other side here. Sorry, folks. I have a problem with my trading screen, this massive television, in that it keeps on going off, and there's no other way to, doesn't seem to be any way to stop it from automatically turning off after a certain period of time. Then I've got to recouple my charts to it, which is very annoying. Ah, there we go.
Started working, right?
Yeah, all good.
Great.
All right, so Bitcoin's on its way up. Now, what I want with Bitcoin, folks, today, for those longer term traders in Bitcoin, if you're interested, what I'm really looking for, if you are, and I'm sure there are a lot of Bitcoin traders, the first thing I was looking for is a reclaim of the 200 period moving average. And like I said, trading is not rocket science. It's not difficult. It's only difficult because we make it difficult because our brains don't work very well, and we're attuned to fight or flight. When we start losing money, we tend to immediately leap into fear and start making terrible decisions. But when you look at your charts, and I'm sure many of you have done it before, you look in hindsight, you look at what happened a week ago or 2 weeks ago or a month ago, and the way you traded it compared to the way you could have traded it, you can look back and go, wow, that was so simple. It was so easy. And then if you think about the mistakes you made and the wrong decisions you made, it would normally not be because you misread the charts, but because you knew that the trade was going against you, that a support level had broken, that you should now be out of the trade or reversing direction, and yet you don't because of fear and greed. And that's the downfall of most traders, including experienced traders. In fact, I know a trader who'd been trading natural gas for years and years, who just took $100,000 loss on his natural gas trading account, and the market didn't even move that far. So, and he'd been trading for about, I think, about 15 years. So, and because he didn't get out of the trade when he should have. Right. So this is Bitcoin, long-term chart. There's the 200 period moving average. Look how we've spiked down today. Massive spike down. The first thing I want to see is a close back above that 200. We've got that right now. We're back above it, which is fantastic news. We have not closed. The next thing I want to see is a close above this downward sloping channel line, and also this Fibonacci level, which is the 38% fib. That's at 86,400. I'd love to see it close above that fib level and this previous swing high. Then above the underside of this short-term channel, and then above the red line, and so on and so on and so on. And so we start to set small interim targets and goals. And if you're swing trading, you may want to exit on those big rallies and then wait for dips to buy back into, or you might want to add to your position on a break through those levels and a closure through those levels, and so on and so on. But we want to see Bitcoin, first of all, making a spike low, big reversal candle. We love that. Not only is it a spike low, it's also a spike high. Yesterday was a spike high. That forms a one up, one down reversal pattern. Very, very powerful reversal pattern on any chart, even natural gas. We traded a lot on natural gas because it indicates a certain market psychology. This market failed to move up. It moved down. The sellers won that battle, but only as far as it got there. Then the sellers took it down again. They lost that battle. The last people to win the battle in a one up, one down are the bulls who initially failed and then beat the bears on the bounce back up again. That puts the bulls in the driver's seat, and that's what we want to see. That's what we've got going on right now. Fantastic chart. We do want to see it close right up here, and ideally above 8,600. That's my goal for Bitcoin today. I think we could get it, and that should set us up for a massive monthly or weekly reversal. On a weekly basis, let me quickly finish off with this before we go back to our day chart, which is now in some profit. On a weekly basis, we really want to see a big spike week. And ideally, I pointed out this red line to you on the previous chart, on the day chart, at 92,370. Ideally, we'd see a close above there or very close to that level on the weekly chart. That means today. Can we get up to 91,000 today? We're at 83. Sounds impossible, ridiculous, unlikely, preposterous, but it's possible. Trust me. I don't think it's going to happen, but it's possible. That would be the ideal on the weekly chart. But let's start with the daily chart, looking fantastic. That's what we want to see on Bitcoin. And Ethereum is beginning to follow suit a little bit, as is XRP. So all of these doing the same thing at the same time. Now we can go back to our day trading chart. There's Bitcoin just moving up. Now, before we get to Bitcoin, a lot going on here. This is NASDAQ. Look, we got to that chart level, broke through it, and failed. That's a failed break so far. We'll watch to see if we can close above that line again. If we do, that's when we'll take our long. That's why we wait for the second candle. Remember I said on that previous one, if we had waited for the second candle, which we didn't take the short here, waited for the second candle to close, it closed back up within the range, negated that short. Here's the second candle, this black one. Same thing's happening at the top here that happened at the bottom. We got through the level, closed above it, and we've now failed and starting to move down. We could carry on moving up. We'll have to wait and see. I still think we'll probably close above that level at some point pretty soon. Now, back to Bitcoin. So there's our long position, which I didn't take, as you know, because I can't on this broker. But that would only be a small position right now, only a 30% position if I did take it. And I'd be looking to add some more on a dip back down, which we still could get. On a dip back down and another reversal candle, I'll then add another 30% probably, or maybe the rest of it, the 70%, something like that. Above us, we got a little order block there, tiny little one. So we're moving up into some resistance levels. Our target for this trade is either there at 84.5, or we could get up all the way to 86.5. Let's see how we go.
Perfect. Meanwhile, James, I have one question for you. Like, what if trade doesn't go as planned? How do you decide whether to cut losses or wait for the potential reversal?
Yeah, so here's a good example. When you're day trading, it's better to get out of a trade as quickly as you can and don't hang around. You know, I was talking to one of my colleagues, part of my team at Arcus FX, and he reminded me of something very funny. He said, you know, when a day trade goes wrong, it turns into a swing trade and you hold it for longer. It's now a swing trade. When a swing trade goes long, you tell everyone you're adding it to your long-term account. It's a long-term trade. You know, it might last a couple of years. You don't want to be doing that in day trading. We don't want to go from day trading to swing trading to long-term account in our trade ideas. So The idea is to get out of the trade as quickly as possible. We don't want to be adding to trades. We don't want to be shuffling things around, doubling down, any of that sort of thing. You want to be into the trade, and then you want to get out of the trade as quickly as you can. Here's a good example that we saw together. This moved down today, bounced off that level, and if you had got short there on that breakdown through the range, which you may well have done, and I'm sure many people did, and then the candle reversed straight back up again, the exit point would be on the closure of that next candle. So literally 5 minutes later, you would be out of that trade for a loss. You would have got into the trade at the breakdown below there to, let's call it 2050, 2450, and you would have been out of the trade at 2510, something like that. So about 60 to 70 points against you. Now, that depends on your risk profile. If that could, for some people, that could be too much, 70-point loss. For me, I think around about 100 to 150 points in day trading is okay. I'd normally aim for about 150 to 300 points on a decent day trade. So if you're risking 80 to 100, 150 points on your day trade, that's okay, in my opinion. But you may have tighter tolerances than I do. But nevertheless, you want to be at least out of that trade the moment the second candle closed, having performed this tweezer bottom. Okay, a tweezer bottom is when the bottom of each candle, subsequent candles, is identical, like here. And not only is it a tweezer bottom, but it's almost a bullish engulfing candle. And so you would have been out of that trade immediately. Or if you're hedging, you would have hedged that trade. And I would now be in a short trade. If I was in it, I'd be in a short trade at 2450 and a long trade at 2510. The 2510 trade would now be in profit, and the short trade would be in loss. And it doesn't really matter now what I do. Obviously, I want to try and get rid of that short position as quickly as possible if we start moving higher, but we've not confirmed a move higher just yet. And so I could, if I was in this, which I'm not, I could hold on to that hedge and just wait to see what happens. Sometimes, very rarely, but sometimes the market will just stay where it is for the next 5 or 6 hours and only move later in the day, in which case there's nothing much for me to do apart from set my alerts. I'd set a trade alert there. Once again, with TradingView, just click on this thing on the right-hand side. It looks like a clock. And let's say I want to put an alert at 2630. So I just create an alert and I just type that in there, 2630. And I do the same at the bottom. I'm not going to do that now, but there you can see a little triangle. That's my alert. You can see the alerts in there. And that'll send an alert to my phone, to my email address, and to wherever else I want it to go. And I can then, if we reach that level, or the one at the bottom, which I have not set, I could do. I could set that one at the bottom there, right there at about 2450. And then if and when we get there, I'll receive all sorts of alarms. I can come straight back to my chart, knowing that my hedge is still in place and that whether I act or don't act, my risk is not going to increase or decrease. It's locked in, and then decide what to do. So right now, you can see that order block is appearing and disappearing as the market moves higher. And we'd be tempted to take a long trade on a close above this top black line and get this market going in our favor. So what I do to take a trade, I'm just going to illustrate this for you, not just yet, but I click on this. I've got my Pepperstone broker set up with my charts, so I can trade directly off my charts. And for the purpose of this, I'll just take one unit, which is equivalent to 20,000 and a bit dollars, and I'd take the trade. And then after that, I put in my stop loss. I can do that immediately if I want to. Normally, I exit my trades manually. I don't like showing my stop losses too much for various reasons, including not trusting brokers in general, full stop. I don't want them to know where my stops are either. So I can keep that order window open. And if you think brokers don't do funny things, you're wrong. They do. I know that for a fact. All right. So my alarm has just gone off, as you can hear. So let's get rid of that alarm. Thank you. It's just let me know that I should take action. And I'm going to buy NASDAQ right now. Now, let's just see how many minutes to the close. All right, we've got 1 minute until this 5-minute candle closes. I want to see it close above here. So we've now tested that level. We've closed above it once, rejected down, and we're closing above it for the second time. So I don't need to wait for a fourth candle for this. We've already got all our candles in place. I wish the time would roll over faster because it's starting to leave us behind. But we must wait for the, there we go, 5 minutes candle. Let's see if we can get a little dip back down to the black line. If it starts moving higher, I'll get in immediately. Can we get a little retracement back down there? No. All right. So we're long on the NASDAQ now on this 5 minute chart. As I said earlier, please don't take this trade. My day trading might be a little rusty. I don't think so, but let's see. And that's called a breakout trade. We've basically seen the breakout attempt. It failed on the first occasion. The second occasion now, in this last candle, has closed above that line. We're now in this market long. And the prospect is for a move up to the next resistance level, which is this black line up above us, which is a previous swing low. And if I switch to the 15-minute chart, you'll see previous swing low on 2 occasions there, on 1 occasion there, and I think there was another one as well, wasn't there? Can't remember. We go to the hour chart. Maybe not. Yeah, it was actually. It's a swing low there and there. So this is a pretty key level, and it's a swing high there, swing low there, swing low, that little bit in the corner there. So it's a very important level, this on the NASDAQ, and it should be a important levels are often price magnets, means the market tends to and wants to move towards them. And that's a price magnet. That's the price magnet there, just below 21,000, 21,900. And we're in long. We're in $7 of profit on that trade. Let's see how Bitcoin's going on the other side. Bitcoin's surging higher through that first order block. So that one's in profit. This one's in profit. And we're off and away. And I think, folks, that's it. I'm going to have to get back to my own trades right now, if you don't mind. I've basically just outlined to you the structure of my longer term analysis on these markets. Very bearish on Bitcoin and NASDAQ, but at key support levels. We're at the bottom of the range, not the top. Therefore, we should be looking for longs, not shorts. And we look for the short-term setups on these 5 minute charts and just look for basic levels and order blocks and trend lines and got into the trades. And that's it. Now, I don't know how far these trades will run or if they're going to run at all, but I think they've got a pretty good chance. It is a Friday and we've had a big sell-off, and I think the markets would like to have a little bit of relief. I think there's been a lot of talk about all these tariffs and the Trump stuff. Tesla's been selling off a lot. Just I can't see Tesla right this minute, but it's been selling off dramatically. Let's have a quick look. Which has also helped drag the markets down. Tesla's got a nice bounce on it today, actually, which is fantastic. Tesla bouncing off the 200-period moving average. See, these are all very simple things, guys. 200-period moving average, that purple line, and this trend line down below there. Look at that. Once again, doesn't get any technically neater than that. And so going along at that level there on Tesla, at the 200, at that rising trend line, after selling off 7 days in a row or something like that. I don't know if it's 7, but it's something like 1, 2, 3, 4, 5, 6. Today's day number 7. And so bouncing off there nicely. And that might also help to drag the market up. We have a long position on Tesla, by the way, and we're also long on the NASDAQ. Very small position on the NASDAQ, slightly larger on Tesla, nothing on any of the other instruments at the moment. Oh, we have a long position on Coinbase too. Forgot about that one. Let me just quickly show you. Coinbase, pretty similar. I had this drawn in, and some of you might have seen this on YouTube and on X, but I had these blobs drawn in weeks ago, actually, and this channel line. And I said, if we ever get down into that blob, I'd be looking to buy Coinbase. We actually bought a little bit at the 200-period moving average, but we failed to hold there. This is the main area that I was looking at. Down into that block, there's the channel center line, the channel bottom line. Yeah, we're below all the moving averages, and we haven't quite reached that order block or the channel bottom, but it's a good area to be buying at least for a short-term bounce back up to the 200-day moving average, which is right here. And that's Tesla. That's the only other stock that we're in. That's Coinbase, sorry. The only one that we're in. So we're in the only other one. We're in Tesla, Coinbase, and NASDAQ. Actually, all long, despite the market sell-off. Unbelievable. Let's go back to these charts. There we go. NASDAQ surging higher. $23 profit in there, and Bitcoin surging higher. So folks, I just wanted to illustrate these two very, very simple approaches. This is a breakout trade. I don't always trade breakouts when I'm day trading. Very often there will be bounces off trend lines, support levels, moving averages, that sort of thing. But in this case, when you've got a very clearly defined opening range like we did, absolutely beautiful, you've got to be aware of two things. The range breakout may be a false breakout, like we had initially earlier on this morning, false breakout. Be very careful of that, particularly in the first few minutes of trading. That was just before trading opened, I think, or at the market open. That was the fake move at the market open, and then the real move has come in now. And we're long on that one, and we're long on Bitcoin. Thank goodness it's going up. Target for Bitcoin, 87,000. My target's actually 160,000, but not today. All right, I'm
Everyone
done.
has that wish, James.
Yeah, sure. Yeah, that's why it's not going up, unfortunately. But the problem with Bitcoin is that too many people have been too excited. Everyone buying at the top, and that was, going to cause the market to correct. But that's it. Have we got through all the questions? Are there any more questions?
Well, I don't have any more questions. I guess if someone has any questions, please write us. We are here for next 2 or 3 minutes more. Would that be fine, James?
Yeah, sure. I can actually see the questions here. You can highlight the questions as well. Do you know that?
Yes.
I can't do it because I'm not in charge here. But if you want to put some questions up on the screen, it's actually easier for me because I can't really. It's difficult to hear.
Okay. So right
But I think
now I
that's
don't have no new questions yet.
I think we've.
So I
Good.
guess we can just end the session then.
Yeah, Devram, it's not a scholastic; it says stochastic. Devram, are you from? I know that you visit on some of my other channels as well, Devram. But are you from the UK? Because I have a friend of mine who's a trader from the UK who also says scholastic. I don't know why, but it's stochastic.
That's what I got confused.
Yeah, and it's not stochastics; it's just the stochastic. Yeah. Anyway.
Well,
Right,
actually,
I think. Sorry.
yeah, before we go, I'd like to ask one question here. So, just a question that, mm, so what's the biggest mistake you see traders making in live trading, and how can they avoid it?
Um, there are a couple of things in live trading that throw people off. One is when your price moves, when you move into a loss. It's really just a matter of people not being able to either be emotionally disciplined to take the loss or to hedge the loss. And it's a very tiny. It starts off really small. You get into, let's say we're long on the euro against the US dollar, and it goes against us by 20 pips or 30 pips. And that's okay, no problem at all. Then it goes against by 50 pips, and immediately your preservation instincts kick in. And I just a couple of years ago, I finished an honors degree in philosophy, and it's interesting how these things pervade, throughout philosophy and psychology. The instinct kicks in to preserve yourself, preserve your capital. And when you're at a 50 pip loss and you start to feel that, you start to make poor decisions, and you start to either move your stop loss or add another position to your already losing trade. Not saying adding to positions is wrong. It's often a very good thing to do, particularly if you're averaging into trades. But you start to make poor decisions, and then you end up with a much bigger loss than you thought that you'd eventually. So I'm sure you've all experienced this. You enter a trade, some random trade that's not really that important to you. Let's say you're long on the VIX at 20, and it goes down to 18, and it's just a trade that you sort of took offhand by chance one day, and next thing it drops down to 17, and then 16, and you buy a bit more, and suddenly your very tiny little flutter or gamble, little baby trade, is much bigger. And then it moves down to 13 and then 12. And your baby trade is now becoming quite big. So you add some more because you don't want to, and you end up in this downward spiral of losing money in a trade that could have just been so simple and so easy to prevent the loss. You could have taken a 0.1% loss or 0.5% loss instead of what turns out to be a 50% loss. Now, for some of you, that might be okay, and it depends what you're trading. I'm prepared to take a lot more losses on Bitcoin in my particular Bitcoin account because of the nature of the way I trade it. But when it comes to your regular trading account, money that you can't afford to lose, money that you want to preserve and that you want to look after, don't let those big trades get out of control. They always start off quite small. It's probably almost never that you've just leapt into a trade with 1,000 lots, maxed out your account on one single trade right at the outset. Some people will do that, but not very often. Normally your trade starts out small as just oh, that looks like a good idea. I'll just short the Swiss franc against the dollar. I mean, how bad could it be? It might move against me a little bit. Next thing, it's moved 100 pips against you, add a bit more. Next thing, you wake up in the morning, it's moved 300 pips against you, add a bit more. Before you know it, 24 hours later, your tiny little flutter, little gamble, little side bet has turned into a massive loss on your account. And you can't sleep, so you make even worse decisions because you haven't slept well that night or the night before. And it starts to get into a downward spiral, mostly psychological. Not so much, obviously, money's going away as well, but it's not that kills accounts. It's your mind, it's you. That's the problem, not your knowledge of technical analysis or not the markets. It's not the market's fault. It's never the market's fault, even though you think it is. And people start shouting manipulation by the whales, manipulation by the banks. It's not that. It's because you've got into a psychological downward spiral from which you cannot extract yourself, to the point at which you don't even want to look at your charts anymore, because if you look at your charts, you're going to get depressed, you're going to get anxious, you're going to turn to the bottle or the pipe, whatever it might be in your case. I don't drink, by the way. Now we're talking these markets now reversing, so we've got to be pretty careful here. And I should have left while we were up, right? So let's see how we go. Probably just pulling back to that trend line, but maybe we'll get a bounce off there. This will be the natural support area. So yeah, so those are the problems that people encounter in my experience, and I've been around a lot of traders, not just my own trading, but I've been involved with traders and teaching traders for 25 years, and nothing changes in 25 years, despite changes in markets, technology, introduction of cryptocurrencies, introduction of longer trading hours, introduction of faster computers, algorithms, computer bot trading, all of that stuff that's come in has not changed the way the market overall behaves, and it has not changed the way traders get into a pickle time and time again through what starts off as a little small mistake or flutter or side bet turns into a massive catastrophic loss. That's the biggest problem.
Well, I do agree, James. You learn from your mistakes, I believe. When
Yeah.
you do some mistakes, you learn, definitely.
Yeah, absolutely.
Well, thank you. Well, thank you so much for answering this question. And thank you so much for the insightful session and sharing your experiences and strategies. So I'm sure a lot of traders will get benefit from this session.
Yeah,
Okay.
I hope so. I mean, it's been great to join you. Unfortunately, I some of my viewers, it was a bit short notice. I think there could have been more people here, but it doesn't matter. It's our first go at this, so it's better that we're just a small, intimate group, I suppose. And if there are any major mistakes, no one's going to get too upset. So it's been fun.
Absolutely. Thank you so much for your time, James. And let's end the session now. So if you like this session, please like this video. And if you want more videos like this, hit that subscribe button and the bell icon.
Yeah, thanks so much.
All right.
Shut up.
Thank you.
I enjoyed it.
James.
Thank you very much.
You too. Bye-bye.
Ciao.